Hi guys, so it's Trader Tinashe and today I am going to teach you how to catch trades like NFP, CPI, PPI right before the movement, and I'm going to teach you and show you how everything works, how people catch these trades, and how to study and master your fundamental analysis to catch perfect trades like this. So the first thing you will do is go to this website called investing.com. You can use CNBC, you can use investing.com, you can use Bloomberg. There are a lot of websites to use, but I like to use investing.com. So when you reach this website, right, you have to go to the top of the page here. There is a section. The first section will be written economic calendar. So on other devices, you might not have this economic calendar right here. So just try to move here and go to tools. When you get to tools, go to calendars, then press economic calendar. After you press it, and it finishes loading, it should bring up a page like this. Okay, so I'm going to explain to you in detail what fundamentals are, what news events are. So um, the economic calendar shows you the time where major news events, not major only, but all news events are. So this the job of the economic calendar is to show you every news event that will happen throughout the day, throughout the week, throughout the month, and throughout the year. So all you have to do is to mark your trades, mark your time, the time that the news events are, and then get back to your technical analysis. So fundamental analysis is just you looking at the news, knowing the time when the market will be volatile. So that you know, something that you should know is that the market doesn't change direction because of the news. The only thing that changes the direction is technical analysis. So if your technical analysis is perfect, then know that your fundamentals will respect you. So your job as a trader is to know the perfect time when the news will come. So if the news is to come at 1 o'clock, you have to be up before one. You have to be up at um 12:30, and you should be looking at the markets, looking for the perfect trade that you will enter. So if your fundamentals are at 1 o'clock, your job as a trader is to go back to your technicals, look for the perfect trade, and just make sure that before the trade comes, you would have find a perfect trade. So today I'm going to be teaching you on how to find the perfect trade before the market reaches the market does the movement. Always remember that fundamentals don't change the direction of your trade. They only they only make the market volatile. So if news comes, don't expect, if you are in a buy and the market goes the wrong side, don't say fundamentals blew your account. The only thing that blew your account is your negligence to study the market correctly on technical analysis, because technical analysis is trading and fundamental analysis just moves the market to reach your TP even quicker. So with that being said, after you open this page, the economic calendar, go to current time. Okay, choose your time. I'm currently in Zimbabwe, so my time goes well with South Africa. So South Africa right now, Johannesburg is +2. So that's the time I will use +2. Okay, you can see that it's 8 o'clock here, and it's also 8 o'clock on my desktop. So you now go down, you look at the markets. So what you're looking for is these stars. So you're looking for markets with 3 stars. Sometimes you can trade 2, but in this case, I'm going to teach you how to trade 3 stars. So the number of stars means the number of impact the news has. So if you go down, you can see that we have 1 star news. It does have impact, but the impact is low. It's negative impact. So not negative as such, but it's slow. So if you go down, you see that most of the news events have 2 stars. You keep going down, 2 stars. Then at 11 o'clock, we have CPI for the euro currency. That's 11 o'clock, and it has 3 stars. So after you find your news event, the news event you want to take, you open it. Okay, you can even set an alert on when to take the news. Right here, there's a little bell that you can click, and then you set the alert. So right here, if you press it, it explains to you what the consumer price index or CPI means. It explains it, everything is here. Then it explains what happens. So there's the forecast and there's the previous. The forecast is what they are expecting. So if they're expecting 1.9 and then the news comes out negative and the actual will refresh when the news comes, it means that if it refreshes and then shows a positive impact, it means that a higher than expected reading should be taken as a positive bullish for the euro. So it means if it's positive, if they were expecting 1.9 and then it comes out as 2.5, it means that the euro is positive and you are expecting buys in the euro currency. So euro USD and everything that starts with euro should buy. Same for the forecast. If it comes, if the forecast is 1.9, the forecast doesn't change. What changes is the actual, and the actual is 1.3 or negative 1.1. It means that that's a negative impact and the market is going to go down. So with that in mind, you should master that in mind. That's the first step on how to master your fundamentals. So the first thing is to mark your forecast. You have a 1.9 forecast and you're expecting the actual to be higher or lower than 1.9. So when the news event is released, this will move. It will either become higher 2 point something, or it will become lower 1 point something, or in some cases it will just remain where it's at. That will mean that the news doesn't have a great impact. So after this, the next thing you do, right, is then master these patterns. So this is the cheat sheet for chart patterns. So just make sure that you have these chart patterns in your phone. If you're going to take a screenshot, if you're going to load it, just make sure to scroll down on the description. I have the link of the Telegram group. I will send the cheat sheet so that you can have it in your phone. It will be in a PDF format so that you can look at it at any time. So what the cheat sheet does, it shows you all the patterns that happen. So there are two types of patterns. There are reversal patterns and there are continuous patterns. Reversals and continuous. So your job as a trader, every time a news event is about to be given out, the market should be on the verge of creating a reversal pattern or on the verge of creating a continuous pattern. So the green line would have started. So what you're looking for in the market is the green line. On your technical analysis is the green line, is the green movement. So every time a news event is about to be given, the market should be right here, or right here. So in some cases the market won't even be here, it will be somewhere here. So example, the market can be here. So that's when you see people complaining that we were stopped out, the news first moved in a zigzag line, or the news wasn't straightforward. What That's nonsense. It's just because you didn't analyze your market. So if you knew correctly, you would wait for it to create this and then continue. So what you're looking for is the chart patterns in every market. So we have Euro USD news at 11 o'clock and it's 8 o'clock. So this is GBP USD. So what are we doing? We are looking for trades that will align with the news. So GBP USD and Euro USD correlate. So if euro is buying, then it also means, in some cases, not in all cases, it also means euro and GBP both buy. Then USD should fall. They are both against the US dollar, so they correlate. So in this case, this is GBP USD. If we are looking for the entry for the news that is going to come, we go to the economic calendar, right? We have the news that is going to come at 11 o'clock. We're going to wait for the focus. So what this means is, if the focus comes above 1.9, we go back to our chart. We're expecting a buy, but where do we expect the buy? We now go to our chart pattern. We look for the pattern that looks a bit like the market that we are currently in. So in this case, I'm going to stick to a continuous pattern called the flag pattern. Where is it? Okay, the bullish falling wedge. We have the flag here. This is the bullish flag pattern. You can see that it goes up, creates these lows, and then goes up again. So in this case, let me just move back to the line chart. You can see that the market went up, created 1, 2, 3 bottoms and is now going up. So we go back to our chart pattern. You can see that there is a distance here that it covers. The same distance it covered here should be the same distance it covers here. So the same distance that the accumulative move was, it should be the same distance it covers here. So now we already have a trade. So you go to your pyro channel again, you place your trend lines, you place them to your bottoms. Okay, it will come out something more or less like this. If you want it to be specific, you touch the points here, and then if you let it go, you see that it already retested. And then in this case, you have a perfect flag pattern. So what you're waiting for now is for the market. You are going to wait for the market to come retest this zone. In some cases, it won't even retest this zone, it will keep going up, but that's what you're waiting for. So the time from 8 o'clock now to 11 o'clock, those 2 hours, is the moment the market creates the movement it's going to do. So right now, what you're going to do is just place your buy limit. If you use buy limits, you can just place your buy limit, and you're going to wait for the news to come. So we know that the market won't come back in this box. It has to respect that channel. So we're going to leave the market like this, and then we're going to wait for 11 o'clock. So the market might go up, dance around, come back down, but we don't care about that. What we care about is the 1058, 1059 movement. So at 1059, the market should be in this zone, and when it's in this zone, we buy hard. We wait for it to retest this zone, then we buy hard. And then just to confirm, at 11 o'clock, the market will shoot. In some instances, the market won't shoot. It will wait a bit and then start moving up later slowly, but we already have our trade. So when the market shoots up, you come back to your economic calendar. When it's 11 o'clock, you come back to your economic calendar. If you see the forecast higher than if you see the actual higher than the forecast and it's green, in your phone it should be green, then it means that your trade was perfect, and that's another confirmation for a buy. You go back to your chart, it's all money, and then you're just holding the trade and waiting for the TP. The TP should be the same distance. So there are two TPs. The first TP should be the distance from here to here. You take it, then you place it right here. So this should be your first TP. Then your second TP should be the distance from here to here. So depending on the power of the news, that's how you get your take profit for this trade. So how do you see the impact of the news is what I will explain shortly. Let me just put this first. Okay, so to see the impact of the news, I think my stop loss, yeah, maybe, yeah. So to see the impact of the news, what you do is you go to your economic calendar. You can see the difference between the previous and the forecast. The difference was from 1.9 to 2.2 was 4. Is it 4? Yes, it's 4. 1.9 to 2.1, 2.2. Should be 3, sorry. So that there's a 0.3 difference. So if the actual comes and it's higher than 0.3, higher than the average distance, it means that the news had more power. If you see this actual become 4.5 when they were focusing 1.9, the further the distance from the focus is, it means the more profit you're expected to make. So in that case, you go back to a chart, it means that the market will move up very fast. So just like that, you have your trade. So let me just explain let me just give a summary of what I just said so that you understand. The first thing you do is you go to your economic calendar, you look for the time and trade you want to take. If you find a 3-star news event, you take it. You look at the time, it's 11 o'clock for the news. You go to your chart, you look for a chart, you look for a chart pattern. So in this stage, you go through all the charts with Euro or GBP and find the perfect one that has a pattern already, or one that is in a channel, the channel we always talk about on our different videos. After you find those markets that are in a perfect channel or that are in a perfect chart pattern, Remember, these are the chart patterns. We have the flag patterns, we have the reversal patterns. This is my favorite, the double top and the double bottom. If you find a double top or a double bottom, just know that the market is going to make you rich. So that's your job as a trader. After you find the time for the economic news, you go back to your chart patterns, you look for the market that's ready to fall into one chart pattern. You wait for the news event to come. That's going to come at 9:59. You place your buys, and by 9:59 it should be in this zone to buy, or in any buy zone, in any support zone. You place your buys, and then you wait for the market to reach TP. So other traders like me, we already have a breakout here, so this would be a trade for me. I would take my trade and place my TP here. So what happens, if the market comes, and then if the market falls back to the retest, it doesn't reach my stop loss. But if it doesn't fall to the retest, we'll just keep buying, and then we'll make money from it. So the news event will just give us more movement to buy. So just like that, we can now tell that the news is going to be positive. Even though the news isn't out yet, we are pretty sure that the news is going to be positive. So if it's positive for the GBP USD, it means we are selling USD. So in this case, we are buying gold and we are selling US dollar. So if we go to any market with the US dollars, we can just do a quick analysis on them, and then we'll see that you already have a sell as well. So in this case, like always, I'll place my channel, I'll find my trend. Okay, in this case, the market was in an uptrend, and then it went down, started going down, and then created a downtrend. Okay, let me just see if this works. Okay, this works, but it's too big for the market. I won't use this. Okay, this is me just confirming what trend we are currently in. So in this case, I will touch this point and touch this point as well, touch my lowest point, which happens to be here. And what I'm going to do is wait for the market to reach this point. So as I'm waiting for the market to reach my take profit point, I already know that GBP USD is going to buy. So if GBP USD is going to buy, this means USD is going to fall. So if USD is going to fall, I know that this is going to be a sell trade. And if I am going to wait for the news event, this is what I would do. I would take my rectangle, put it on my support. This was my support. The support was broken and retested correctly. We take our rectangle again, find another support. We have this one, which the market is currently at. Okay, so what I'm waiting for is for the market to retest this zone. It's currently retesting it, but I want it to fall down a bit, then come back and retest it. Then after it retraces my zone, I am going to look for a short position. So my short position would be from there to there. I would put my stop loss right above the first high, something like this. So just like this, I've got a perfect trade, which I'll just wait for the news. The news will make my TP reach faster, so I know that my take profit will reach sooner than expected. So just like that, I now have a perfect trade. Let me just align this a bit. Okay, just like that, I have a perfect trade for my GBP USD and Euro USD, my USD JPY and GBP USD. So the next thing I do, go back to the calendar, look for more trades today. We can see that at 4 o'clock we've got ISM manufacturing PMI. Like always, we look for the difference between the PMI and the forecast, like we did for the CPI, for the Germany CPI, for the Euro CPI. Okay, it explains that a higher than expected should be taken as a positive bullish movement. We look at our actual and our forecast, wait for the actual. If the actual is higher than the forecast, then this means a great positive impact. You look for the pattern that the market falls in. We go back to our charts, we look for the perfect chart. Okay, in this case I'm going to work with USD CAD. Okay, we look for the perfect, what you call it, the perfect place to place our channels. In this case, I can place it like this, but it won't respect this line, so no, I will move to the 1 hour time frame. Okay, On the 1 hour time frame, things are a bit more clear. Okay, on the 1 hour time frame, I can work with this, touch this point and touch this point. The low of the two is right here. Okay, so let me explain this real quick. So, okay, just make sure that your trend line touches the body, not the wick. It should touch both bodies. So, in this case, you have a very good trade. This is a very, very good trade. What you're waiting for in this case is for the market to touch this point. So we know that before the market moves up, before the market goes up again, it should first touch the bottom of the candle, the bottom of the channel. So in some cases it might touch, then drop, then go down. Then in other cases it might touch, create a double bottom, then go up, or create another reversal pattern, then go up. But in this case, what you want to do is to make sure that we take this trade. What you want to do is to make sure that we are in this trade. So what you do is look for a short position just to cover this distance. This will be a small scalp on the maybe the 15-minute time frame or the 30-minute time frame. So if you're going to look for this trade on the 15-minute time frame, you would see that it will come out pretty well. You look for your support like always. Okay, this was your support. Okay, this is your major support. So this also should be your entry zone, or you can enter now. Both ways work. And then your stop loss should be right above this high, or work with this high. Then your TPs, yeah. So this is a fast movement, and we just want the market to reach this point. You know that the market reaches this point every time. It should respect the channel. So that's your job as a trader, just to look for the perfect trades, work with your chart patterns, and just like that, you catch your trades. You catch very good risk to reward ratios, and everything else will go well. So that's it for the day for today. So I hope you got a few things about how to use the economic calendar, how to use the chart patterns, and also how to place your channel so that you catch good trades right before the news events come. So make sure that you are subscribed, and make sure that you are following every video we drop. Every video we have something that you learn that will help you master the markets, and this is completely free. You just have to scroll through my videos and look for the perfect one, and it will help you just like it helped others. So make sure you like, comment, and subscribe, and see you on the next video. The link to the groups where I give free signals is in my description, so you can just make sure that you join there so that you won't miss a thing. Thank you.